Good day once again, guys. I'm super excited to have you here. So in this video, I want to open your eyes into another dimension of market of chart study that is beyond you but that is beyond strategy alone, right? So a lot of people has limited the study of charts to them just implementing or to just the use of their strategy alone. Some people has forgotten what we call the real study of charts, and this is what this class is about to expose you to. So everything I'll be doing on this chart, trust me, you can use it on any instrument, anything that is having chart. Bitcoin, you can use it on commodities, cocoa, coffee, anything that is having chart. Trust me, guys. So please fasten your belts, and let's get into the class. Before we go, guys, I have a goal of 10,000 subscriber before the end of 2026. Without you, I won't be able to do that. So please subscribe, like this video, and comment on what topic you want me to discuss next. And that's it. So thank you so much for doing that for me. So let's go.
The way most traders are built, most traders are built to rely on just Forex strategy alone. What I mean, Forex strategy alone is, I mean, most trader are, you see, the way they are taught to see the market, or the way they learn to see the market is, okay, once price do this, I should do this. Once price do this, I should do this. Whereas they've not been taught the flexibility of them understanding what price is currently doing now. So what I mean flexibility of understanding what price is currently doing now is, this is what I mean. Please listen very well. I mean, you see, for example, now we are having gold chart. What you're seeing on your screen here is gold chart. Some people, what they are taught to see is, okay, this impulsive move, this correctional move, impulsive move, correctional move, impulsive move, correctional move, and this is currently impulsive move. So what everybody is expecting now is correctional move. Whereas, listen very well, whereas the market is actually showing you a pattern that if you understand that pattern, you will be able to position yourself for the next move price is going to do. So let me show you, please. For those who are on Instagram, the link to this class is in my Telegram group. So what you just want to do is just go to my bio and click on the Telegram group and join the class ASAP. So now everybody look at your screen. This is not a strategy. This is just you understanding what price is doing. So look at your screen. Let's say we have this point as a low. We have this point here as a high. Please look at this point. Please, everybody pay attention. We have this point as a low. We have this point as a high. Now, note that some people will think that this weak rejection we have here is actually the high, but actually it's not. It's not the high, right? Rather, this is just, you know, I was in a class, was it yesterday or the day before yesterday, and I was making this example. I was saying that imagine you are you're starting a journey from Lagos to Ghana. Normally, the first thing you do is maybe you guys are going to stop in a place. Let's say from Lagos, you're going to stop at let's say Togo, or sorry, I don't know, maybe Benin Republic. Yeah, maybe you're going to stop at Benin Republic, then pick some passengers on the plane, then go to Ghana. Maybe, right? Now, if we are to count that journey, we're going to say that journey is from Lagos to where? To Ghana, right? But within that journey, you know that you guys actually stopped at a particular point, right? That's exactly what price did here. So from the movement of price from this point to this point that you are seeing on the screen right here, right? It's a movement that is clear and that is straightforward. But within that journey, right? Within the journey, price did a stop here, then did a manipulation, and blah, 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 all those things happen, right? But what we notice, price moved from this point here to this point here. If you understand what I've said to this point here, drop 1. Can I have 1 in the comment section? If you understand what I've said from this point, can I have 1 in the comment section? It's an interactive class. You don't understand, drop 2. Feel free. This class, I don't want this class to be long. Okay, I'm having Gabriel FX. Is it Gabriel? Okay. Mr. Olushola Afolabi. Yeah. Mr. Olushola Afolabi. So sorry if I'm calling your name. So yeah. Hello. Please unmute. Hello? I'm asking you to unmute, please.
Yeah, hello.
Yeah, hello, good evening. How are you doing, sir?
I'm fine. How about you?
Amazing. I'm good. So what don't you understand there?
Sorry, I just joined. My brother from Canada just sent me this link. So I just joined now.
Okay,
So,
okay, amazing.
yeah. Yeah.
Okay, so it's not my fault, it's your fault. Bah?
I know. Yeah, you just sent it to me that I should join. Yeah.
Okay, no problem. So what I was explaining is, I'm explaining what's it called, paying attention to patterns in which the chart is printing, not just focusing on the strategy. I don't know if you understand what I'm saying. So someone just write on my, someone just actually, sorry, we always see people like this, they will always write on the screen, right? So I know exactly what to do. So let me fuck up. Disable annotation. So now what I was saying now is, so for you to be successful as a trader, right, you must learn to look beyond just the strategy by observing what the market is actually doing. So each chart that you will be opening is actually telling a story. Each chart, and I'll be showing you here, each chart you are opening is telling a story. The movement of price from a low to a high to a low to a high, is actually telling you a story, and that is what I'm trying to explain here. So I was saying that price created a low here, right? And price created a new high here. Within this high and this low, price created some storylines here. Is that correct? Do you understand to this point, sir?
Yes.
So beautiful. Now, in one of my class, okay, let me just explain now. So in a trend, we have phases of trend. We have impulsive phase and we have correctional phase. Is that correct? I don't know if you know about that.
Just go on. Yeah.
Okay, let me go on. So when we talk about impulsive phase, we mean, what's it called? For example, now let's say I'm coming, let's do something here. Okay. Okay, so we have impulsive, correctional, impulsive, correctional, impulsive, correctional, right? Impulsive, then we're expecting a correctional soon. So let's bring this out. So what we mean when we say impulsive move, we mean the buys in a buying trend. When we mean correctional, we mean the sells in a buying trend. Impulsive move, the buy in a buying trend, the sells in a buying trend is the correctional, right? So now you see, these buys in a buying trend, this impulsive move, they have what we call characteristics. And maybe I'll be having a class concerning that soon. You see, in part of the characteristics of this impulsive move is, anytime an impulsive move is about to come to an end, they create a structural like form that helps validate the next correctional. Let me show you. Let's say this is an impulsive move in a buying trend, right? Before this impulsive move comes to an end, it will create something that looks like this, then go up. Many people will think that this here is the actual correctional, this move here. Where is it now? Where are you? I'm looking for arrows. Oh, okay. Yeah. Many people will think that this here is the actual correctional, but it's not. It's not. Rather, price will still come back. Clear out this point here. Clear out this point before what? Before pulling up. Before pulling up. Before pulling up. Yeah. So now, see, this knowledge, they are scattered pieces. But anytime that you notice this pattern, just know this is what price will always do. So let me show you this. Price created an impulsive move. By the time this impulsive move is about to come to an end, price start creating structures. Look at the structure here. Price start creating structure. Look at the structure here. Price start creating structure. Look at the structure here. Price start creating structure. Look at the structure here. Right? The moment you see this kind of thing happen in the market, right? Do you know what you just do? Just wait. Price will come and clear them out. Price will come and clear them out. At least, price will clear at least one or two. Sometimes price can clear the whole thing, but at least one or two of them. And this is what this price did. And the moment price did that, price created a what? A new. So let's label this point here as a low. Let's label this point here as a low. Let's call this point here a low. Okay. Then let's call this point here a higher high. Sorry, let's make it black. Let's label this point a higher high. Coming. Okay. This is a low, a higher high. then this point here becomes our what? Can somebody tell me what did this point become? This point here becomes our what? This point here becomes our what? Our higher low, right? This point here becomes our higher low. This point here becomes our higher low. Now, after the creation of this higher low, please listen very well. After the creation of this higher low, price actually moves, price pull up to this point here. Then after price pull up to this point here, right? Price pull down back to this point here. So what this price did here was price moved from this point here to this point here. Then price pull down from this point here to this point here. Look at this point here to this point here. Then after price pull down from that point to this point here, price move from this point here. So we had price do this. Please, everybody pay attention. We had price do this. A pull up, a sort of a retracement, then price pull up. So now, question, is this retracement, is it valid? This retracement happened here. This point here, is it valid? No, it's not. Why is it not valid? Because the rule states, according to the pattern this price is currently printing, that before a correctional can be valid, right, price must come and clear out a structure that this impulsive move creates. So which simply means that in all of the move that happened from this point here to this point here, is there any structure price creates? Yes. Which structure is that? It is this structure here, this one here. So for any correctional to be valid, the correctional must come back and clear this point out first before going up. Moreover, this price here did not do that. So rather, price did a retracement to this point, then price pull up to this point here. After price pull up to this point here, many people think that price will keep buying. Do you know what price do? Price actually came back again. Price came down, clear out that structure, validate that theory, then price start what? Then price start pulling up. Do you see this? Then price start pulling up. Please, everybody pay attention to this. Look at this. What did this become? So from here, all this journey here to this point here becomes what? Becomes an impulsive move. Then this is what? This is the valid correctional. If you understand to this point, please drop one. If you understand to this point, drop one. You don't understand, drop two. For those that are on Instagram, the class is currently going on my Telegram channel. So go to my bio and click on my Telegram channel to join the class. Right, so makes sense. I'm happy everybody's getting it. Makes sense. So let's do something now. So please look at this, everyone. So this becomes our valid low. So let's write. Okay. So this becomes our higher low. Then this become higher low. Then this becomes our higher high. Coming. Then this becomes our higher high. So hallelujah is dropping to hallelujah, please. Hallelujah. Let's unmute. Please unmute Ma Hosa. Hello.
Good evening, sir.
Yes, sir. Good evening. How's it going?
Fine, sir.
Yes, sir. So let's take
Sorry,
it off.
sir. I came in late. That is, I don't understand, sir.
So I'm sorry. You know what? I'm going to be dropping the recording on my Telegram. I'm going to be dropping the recording, so you have to watch it again because of the time. Is all right?
Okay.
I'll
Yes,
drop
sir.
I'll drop the recording. You're welcome, sir. So look at this. So if this price created this as a low, look at this. Price pull up here. Look, please, everybody, pay attention to show you how crazy and how effective this thing I'm telling you is. Look at this. Price created this low here. Price pull up created this point here as a structure, right? Price keep pulling up after creating this structure. Then price actually did what? Price created this point here, right? So this price pulled down here. Many people will think, listen, many people will think that this price here has actually what's it called? Has actually validated that theory, but no, it hasn't, because the major move that this price supposed to clear out is this one here. So price did not clear it out. Rather, price comes here to create a what? A higher high here. Then price pull down, clear it out, validating that theory again before pulling up. So now, my people, if this point here is the valid low, if this point here is the valid low, and this point here is the valid high, we don't know if it's the valid high yet, right? But let's say if that point will be the valid high, what do you think your expectation should be? Your expectation to go on buy on gold should be this. Please pay attention, everyone. Your expectation to go on buy on gold should be this. Look at this. I'm expecting price to come and clear out either of these guys before I go for long. So which simply means I'm expecting the sell to come, clear this guy. The moment I see price clear this guy, then price pull up. Price clear that guy, then price pull up automatically. What do I do? Shoot your shot. You go for a buy. Please, do you understand this now? Price will correct to this side, clear this side, then price will pull up. Many school of trading has given this many names. Some people call it what's it called? Clearance of liquidity. Some people call it. See, I personally, I don't believe in all those things, right? What I believe in is there's a way price move. There's something we call the nature of price movements. If you understand the nature of price movement, you'll be able to get exactly where price is going to. And when you get exactly where price is going to, this is now when you can now say, please listen, this is now when you can now say that, okay, you want to input your strategy to actually trade in line of that direction. Does this make sense? Now, this does not stop there. Dr. Ray, now, what if price come and clear this? What if price come and clear this? And how will I know when to enter? Because we can say that this point here will be where price will get to. We can say that this point here will be where price will get to. The price will go up. What if price keeps coming down? Where will I know where price will get to? It's as simple. What I would just ask you to do is look into the past. What has price done? Let's mark out. I'll clear out some drawings now, please. Let's mark out areas in which price I started buying. Areas in which price started buying, Okay, so let's mark out this area. We have this area here. 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 So please, this is a class work for everyone. Can somebody tell me, what do you think is common between all of these things I've marked? What do you think is common between all of these 2 points I've marked? Can somebody drop it in the comment section? What do you think is common between them? Let me see. Engulfing candle, bullish engulfing. Okay. Trend line. No, trend line is not common. No. Based on trend line, you should be selling here. And I will show you. Sunset block. There's no block. Not block. Weak rejections. W pattern. Retracement. High and low. Key levels. Key levels. Okay. So based on your understanding, I'll say you're right. But let me say something. So please, by the way, for those that are on Instagram, if you want to join the class, go on my Telegram group. The link to the class is there, right? So let me show you. Don't stress yourself. The problem many people are having is because they know too much. I'm sorry, but it's the truth. The problem many people are having is because they know too much. Let me show you. The real thing that is happening here is engulfing candlestick. That's all. And I will show you. Look at this point here. This is an engulfing candlestick, a bullish engulfing candlestick. This one here. Look at this one here. This here is a bullish engulfing candlestick. This is a bullish engulfing candlestick. This here This is it here, a bullish engulfing candlestick. So guys, anytime price come and clear out any of those guys, anytime price come and clear out any of those guys, right? So all you just have to do is wait for bullish engulfing candlestick, shoot your shots, that's all. So for me, this is the first exercise. This is the first thing I do. This is the first thing I do before I now input my strategy to say, okay, oh, let the strategy now come and do his work. I first understand the nature of price movement. The nature of price movement. So can you suggest any chart again? Any charts? Any pair that you want us to actually work on? Any pair you want us to work on to show this exact same thing? We would actually break the chart down and we'll look at the characteristics of that chart. Someone said USD card, silver, BTC. Yeah, makes sense. BTC. In fact, I'm currently on BTC right now. I don't know if you can see my screen. I'm currently on BTC right now. Yeah, I don't know if you can see my screen. I'm currently on BTC right now. Right, I'm currently on BTC. I'm long on BTC. So let me show you. Let me show you BTC right now. BTC. BTC USD. BTC USD. Okay. Okay. So let's treat this on a higher time frame, because if you will be dealing with crypto, if you'll be dealing with crypto, right? So you must learn to deal with crypto on the higher time frame, not on the lower time frame, right? It's possible for you to be a day trader on crypto, but for me, right, crypto is a long-term investment. So if you really want to trade crypto and be successful at it, you need to trade it and look from the perspective of investors. And that is what I actually look from, right? That's what I look from. So for those on Instagram, go on my bio, you see the link to my Telegram group. Join the Telegram group, or if you want, join. But if you open that Telegram group, you see the link to this class. Yeah. So just join the class. So I would, okay. So makes sense. So now, what I'm seeing here on the BTC, right? What I'm seeing here on BTC is a buy. And I will explain this buy. The buy I'm seeing here, technically speaking, right, based on your strategy, right, it might not be relating, but gold, silver, US oil, BTC, now, because of what Donald Trump is doing right now, right, they will be on a long, on a bullish run, on a bull run. They'll be on bull run right now. And if you notice the way gold is moving, right, there'll soon be a sharp sell on gold, just like the way you see this sharp sell on BTC. Don't say I did not tell you. Don't say I did not tell you. There will be a sharp sell on gold, right? But before that sharp sell happens, we should still be able to cash that buy, right? We should still be able to cash that buy. I believe tomorrow or next tomorrow, that sharp sell will happen, just like the way we have it here, right? And the reason why we have this sharp sell happen, the reason why it happened is, you see, the way Forex market works is there are some people we call, what's it called? The big whales. Who are the big whales? We have them in the Forex market too. Some people call them the Forex, the market makers. But personally, I call them the big whales. The way they run the market is, these people don't trade using technical analysis. What they trade with is they use, what's it called? Economical indicators. And these people are not the people that trade with $1 million. They don't trade with $10 million. In fact, they don't trade with $100 million. These people trade in billions of dollars. So now, remember that Forex is a zero-sum game. For those who don't understand what a zero-sum game is, a zero-sum game is a kind of game in which whatever you lose is someone's gain. Whatever you lose is someone's gain. Whatever, what's it called? Whatever you gain is someone's losses, is someone's loss, right? So if someone is coming to the market to initiate a trade that worth $1 billion, right? Trust me, let's say the person is going to buy. The person wants to buy wants to open a position worth $1 million, right? It's a market. It's a market. And in a market, you can't just have buyers alone. Note, you can't just have buyers alone in the market. There must be someone who is willing to sell to those that wants to buy. So if I want to buy a product that is worth, let's say, $1 billion, note that there must be someone who is willing, or people who are willing to actually initiate a position accumulatively that should amount to that amount of money that I'm willing to actually initiate. I don't know if that's, please, if you understand what I've said to this point, drop one. If you understand what I've said to this point here, just drop one, please. Okay, makes sense. Makes sense. So now, these are part of the things that actually form that's characteristics of impossible that I explained to you. That when price is going up, price create a structural move, and the correctional must come and clear it down. So this is it. Please, everybody pay attention now. Let me try and explain it as much as I can. So look at this. A price is pulling up. One of the things that push price up is not technical analysis. I used to say this a lot. It is fundamentals, right? So as this price is pulling up here, price start creating structures like this. Remember, many people are looking at this point as areas to set stop loss. Areas to set stop loss. So some people are setting their stop loss here. Some people are setting their stop loss here. So what these big guys, what they do is this. They understand that they too, they want to join this buy, right? But we retail traders, many people that call themselves institutional traders are still retail traders, right? They're still retail traders. Maybe I will take one. Okay, maybe this should be one of my projects in the boot camp. I'm going to take my time and I'm going to explain how the institution actually looks like, right? So even people that call themselves institution, they are still small stuff. So now look at this. So what they will do is this. They notice that you are in on your buy position here. I'm coming. This is your buy here with your 0.01, with my 0.02. These are our buy position here, right? And our stop loss is below. Stop loss is below. So what they will do is, remember, they want to initiate a position worth $1 billion. They would actually sell. They will counter. This is our old buy. The old buy that happened here. They will counter it. They will counter this old buy, right? Go and they will come and hit our stop loss. Remember, anytime you are buying a position, you can try this out. Everybody bring out your phone. Just bring out your phone. Please, everybody bring out your phone. Maybe on your demo account, just buy with 0.01. Just buy now, please. Let me give you some seconds to do that. Buy now, 0.01. If you buy 0.01 now, try and close that position. The moment you close that position, that's your buy position will immediately turn to sell. I don't know if you notice. Please, if you notice that, drop one on the comment section. If you notice that, drop one. Try and buy and close that position. Immediately you buy, just close it. You'll see that your buy. You just pay attention to it. To close to it, to turn to sell immediately. Okay, yes. Many people that many people actually tried it out. So it will turn to sell. Now, the moment it turn to sell, the buy position that you initiated, right? Because price is either you've closed the market, you've closed the trade, or price has taken your stop loss, automatically has turned to sell. So what you bought that took you out, or that you're out of the market, we automatically turn to sell for those that are willing to buy. So if you are selling something, it simply means that there's someone at the corner that is willing to buy it. So the moment price comes to take each and everybody's out, which all of it turns to sell, then they will now buy it from this point here. Then they will now take it up. And that's exactly what happened here. That's exactly what happened on gold. I call out gold buy from this point here. Where is it? Where did I call it? Where did I call it out now? From this point here. Yeah, from this point here. From this point here. Right? Immediately I call out that buy. Then, my stop loss was actually here. Then they took me out. I actually lost $20,000. Let me see if I can show you guys. I lost $20,000 on that trade. I don't know if you guys can see it. I lost $20,000 on that trade. 26,000. In fact, it's $26,000. It happened. So now, based on that notion, based on that, based on that now, I understand that what they did was just clear me out. Price is still going up. It is still going up. So I entered again here. Remember, I said I'm going to enter again. I entered again here, and I'm currently up 1,005 now again. I'm up 1,005 now again. Then from this point here, price should take us up. Price, I'm targeting like maybe $50,000. Yeah. So that's exactly what happened. So basically, on this chart here, what you're seeing here, if we should zoom out, right? If we should zoom out, we can see that at this point in which price rejected from, is actually a zone. This point here is actually a zone. But this zone will be broken. This zone here will be broken. If it is not broken, price will at least get to this area before the next sell happen. It's as simple as that. It's as simple as that. So what is backing this up is more fundamental than technical. That's what I can say about that. More fundamentals than technicals. So I'm going to be opening the floor for question and answer now. So if you have a question that you really need answers to, questions that you really need answers to, so you can ask now. Just raise your hand in the comment section. I'm going to unmute you. Then we're going to have a discussion about it. So, hello, Ma. Please unmute. Hello.
Good evening, sir.
Yes, Ma. Good evening. How are you doing?
I'm fine, and you, sir?
Yeah, I'm good.
Happy New Year.
Same to you. I'm sorry. I didn't say that first. I don't start the year already. Oh, yeah.
So my
Let's go.
questions goes to, I just like to understand the reason I've been eating surplus for a while this night,
Wow.
and I'm so grateful for that. Yes.
Yeah.
So I want to know, since whenever we actually maybe go in for a position, either long or short, and price took us out and eventually goes away, what can be done to prevent it from what's it called? We are being taught to do proper risk management, probably maybe risk 20 pips to 40 pips, and use 1 to 2 risk to reward.
You are yet to subscribe. You are yet to subscribe. We are subscribed now. A big subscribe.
But I noticed most times after doing my analysis, and I will set my stop loss maybe not too far. My stop loss will not be too far from maybe 20 pips away, sometimes 30 pips away, and it eventually go my way after taking me out. What can I do? Like, what can be done
Okay.
to actually stop those?
So, okay. The first thing is start paying attention. Yeah, and that might sound a little bit somehow, but that's the truth. Start paying attention. And what I mean pay attention is, you see, one of the things that actually this thing I just explained now, right? There's no place I read about it. No one actually taught me, but I started paying attention to my trades. That's how I got it. That's okay, this was happening. So now, if you keep experiencing the same thing, right? Something is actually wrong. Something is actually wrong somewhere. And the best way to detect it is, if you take stop loss today, try as much as possible to see that you go back after the old thing has happened at the end of the day. Try as much as possible to see that you open that chart again and replay how, okay, did I set my stop loss too high? How should I have? I don't know if you understand what I'm saying. Is there a better way I would have done it? Is there a better way I would have done it? Or let's say, okay, did I enter too early? Something like that. I don't know if you understand what I'm saying.
Yes, I do.
So,
yes, I do.
there's something called mastery. Mastery is not just you learning something and you initiating it. Mastery is all about you learning, initiating, and applying wisdom to actually tweak that thing to fulfill the purpose you want it to fill. I don't know if you understand what I'm saying.
Yes, I do.
So now I learned my strategy. After learning my strategy, the way what's it called? The way I learned the strategy is plain. Once it breaks this buy, once it breaks it sell, then I noticed that
Okay.
when I start doing it, sir, you taught me once it break this buy, once it breaks this sell. The thing is not selling, it's not buying, right? And you see that same thing that you've been taught, other people are using it, they're making money. Note, the problem is not with them. I teach, right? I mentor people, and one of the things I used to tell them is this: after teaching you my strategy, you can never make as much money as I will make with my strategy, right? If you just replicate the exact same thing I've taught you. I don't know if you understand what I'm saying.
Yes, I do.
The reason why I'm entering for my conviction of entering for a buy, right? Because it's Dr. Ray Swing, you might enter for a buy too. But trust me, that conviction will not be there. But I don't know if you've seen a trade before and you are saying that this trade will buy. I don't know if you understand. And you are sure, there's this urge, you know it's going to buy. I don't know if you understand what I'm saying.
Yes, I do.
That kind of feeling did not come from understanding the strategy alone. It comes from experience. There are many times you've opened your chart and without you even drawing anything on your chart, hey, this is a buy. I mean, now, the funniest thing is you didn't take that trade, but eventually that trade actually bought. I don't know if you understand what I'm saying. In your little time of just looking at the charts, whether you like it or not, your brain is recording some price action, some things that anytime you see that price action, your mind will automatically tell you, it's like robots. This thing is a buy. This thing is a sell. But because, human now, unless we give them a bit of shaker, gandusa, unless the thing is looking rough, we will not believe it works. That's exactly how it is. So start paying attention to your trades. I'm serious. Take your losses more serious. Like when you have loss, be happy that the loss happened. Allow them all markets play for the whole day. Now go back to it. Do this for 2 weeks. We have this meeting again, then you will thank me. Is that right, ma'am?
All right, sir. Thank you so much. I really appreciate it.
Yeah, thank you so much, ma'am.
Yes, sir.
Yeah, is that all?
Yes, sir. That's all. Thank you.
Okay, thank you. Thank you, ma. Thank you. So, Mr. Moses, please unmute. Mr. Moses, please unmute. Hello.
Okay, good evening, sir.
Yes, sir. Good evening.
Happy New Year. And good evening to everyone.
Same to you, sir. Let's go.
So, yes, my question is that, okay, so most of the time I've done my analysis and I'm about to take a trade.
Okay.
I always probably miss out of the market. Probably, I won't say I'm 100% sure with my setup, but I always make sure I've checked my setup and check that everything is very well. And I make use of the top-down analysis. So it gets me worried that because I always watch other mentors talk about always that your trade from the higher time frame or the at least maximum of 1 hour. And I'm always missing out of opportunities, like very long time opportunities that, I see the trade playing out. I see same structure on the lower time frame because I saw that you when directed to the 15-minute time frame, you didn't go higher than that. So you get me worried that is there anything I'm doing wrong? Is it something that once I've find my buyers on the higher time frame, I should just go straight to the lower time frame for entries? I actually tried it before and it went very well and not that good like that, but it gets me confusing.
Okay. So okay, makes sense. So now this is it. Let me start it from where you stopped. Concerning me just going straight to 15 minutes time frame, right? So everyone here is a victim of what we know and what we don't know. Is that correct?
Yes, sir.
So I would say it would be wrong of me to tell you that you going on a higher time frame. You're wrong. And it will be wrong of me to say stick to lower time frame. Right? So discover what works for you and refine it. Just like I've said to the other person, please. So discover what works for you and stick to it. 15 minutes for me works for me. I don't have business on 4 hours. I don't have business on 1 hour. 15 minutes is what I need. And if I'm going to be switching to the person called Ray Swing,
Okay.
that one is this person that is trading now is Ray Day. So if I'm switching to Ray Swings, right? I'm starting from daily time frame. I'm starting from daily time frame to 4 hours. That's when I now do top-down analysis, right? So just stick to what works for you, refine it, then just discover yourself. So that's number one. Number two, talking about you missing out on opportunities, right? I would advise this. It's time you take Forex serious. I'm so sorry to use that word, take it serious. I cannot recommend a better way than for you to be serious with it. Let me give you this option. Imagine if, let me give you this example. Imagine if Donald Trump is saying that you should wait for him, that he wants to give you $1,000 or $10,000, for example, or let's say $1 million, for example. Sir, are you going to wait? Hello, sir. Did I just lost him? I've forgotten his name. Is it Mr. Moses? I think, is it Moses? I think Moses. Hello, Mr. Moses. Hello? Hello, can you hear me? Hello? Hello, Mr. Moses, can you hear me?
Yes, I can hear you, sir.
Just,
I can hear you now.
okay, just unmute yourself. Don't
It
worry.
was muted. The network
Oh,
was breaking out.
okay. Don't mute yourself. We're having a conversation now. Imagine Donald Trump saying that he's meeting for $1 million. Will you wait?
Come again,
So
sorry.
imagine Donald Trump is asking you to wait for $1 million. Will you wait? Okay.
That's that okay.
So actually, honestly, 90 or 80% of people on this call, we are going to wait, right? But you see, when it comes to Forex trading, right, we missing out on trade is the
Yes,
foundation
sir.
is number one. I'm so sorry. This I might sound a little bit harsh. Or should I save this me being harsh for the people that are in the inner circle? Okay. Let me just say that. Is number one is that nonchalant attitude towards towards Forex trading or fear. It's these two things, right? In secondary, in university, in secondary school, even at work, that we know that we cannot afford to give us the kind of life that Forex can give us. If our boss tell us, stay here, I'm coming, right? Everybody will stay. Oh, you will not go home, even if it's uncomfortable, right? Each and every one of us will stay. But because it's Forex trading, we can afford to do anyhow, right? We can afford to do anyhow, right? I'm telling you, most of us here, we just say, okay, so I used to be a victim of that too. I will have set up, then I will come back at the end of the day, then the market would have gone my way. Yeah? I've stopped it. Any opportunity I see in the market, there are two things. Is that hit stop loss or take TP? I will make sure I enter. I will make sure I enter. If the market is not, I've been on my trading decks since, for those who are on my Instagram, you will see that I'm playing music. I woke up around, should I say around 7 o'clock today. I woke up late, around 7 o'clock today. Since then, I've been on my trading decks. Breakfast on trading decks, lunch on trading decks. It got to a point, I got bored, I started dancing on my trading decks. So that's the discipline required. If you know you have a job, right? You have a job that's not going to allow you the time of, monitoring the charts the way some of us can. Get a smartwatch. You might not be allowed with you might not be allowed to press phone in your workspace, right? But watch is allowed. There's that smart watch. Save and get it. You can say you can be watching your chat on your watch. I'm telling you, it's time. See, this year, let me tell you for free now. Let me tell you for free now. See, this year, many people will be shocked with the kind of results. In fact, I will trade to a point this year. You start saying it's a lie. It's a lie. Yeah, it's not that everything's gonna come smooth. But I'm telling you, it's the discipline that we have to give ourselves. I'm gonna fail, I'm gonna come back again. I'm gonna blow account, I'm gonna come back again. That's it. I cannot I have a mentor, a brother. I call him a mentor, a brother. I call him an uncle. I call him a friend. One of the things he's a tech person. One of the things he used to tell me is, Ray, anytime I feel like I'm not doing enough, or I feel lazy, do you know what I do? I go to places where people hawk around among traffic. You know, there's some people that hawk even in traffic, right? In traffic, right? And he looks at them. How much are they going to make? How much are they going to make with this kind of, some of them, you know, they get injured, they will run, chase vehicle for, because of what's less than $1. And when it gets to his trading deck, they say, oh, no, you're getting lazy. Yeah, that's it. Then the next one is fear. Now, one of the reasons why many people miss out on entry is because even if they stay safe, with the waiting, the what it, eventually, it might even hit stop loss, right? That fear of losing is something you have to personally deal with it. The best way to deal with fear is face your fear. The best way to deal with your fear, there's no amount of book you want to read. You can understand it. So you can understand fear. You can understand fear, but understanding does not help you deal with it. You have to face the fear, right? Take that trade. Maybe if your strategy allows you, set pending order. Maybe once price gets to this point, I'm expecting a buy, set the pending order there. Then put your stop loss, then go and do your own thing. I believe this will actually help. Sorry, I'm very harsh, right? I'm so sorry. You forgive me when you start making money and sending me tight. So, Mr. Gabriel, your next person. Hello, Mr. Gabriel.
Hello, sir. Good evening, sir.
Yes, sir. Good evening. How's it going?
I'm fine, sir.
Amazing.
Sir, please, I'm actually quite new to Forex, but one issue I have is correlating the time frame, like going from the higher time frame down to the 15 minutes. I usually get confused and everything just turns to rocket science.
Okay, so number one, it depends on the strategy you're using. Depends on the strategy you are using. Let me what strategy are you using? Let me see if I can, if I have any idea of it.
Let me say support and resistance.
Okay, yeah, support and resistance. So support and resistance, here we go. So let's pick a random pair. Let's do GBP USD. Let's pick a random pair GBP USDs. Why is my service slow? Okay, so makes sense. Remove drawings. So let's say you're a day trader. So number one, right? Number one, the first thing you need to understand is, are you a day trader, a swing trader, or Mr. Gabriel, please unmute. Don't mute yourself. Okay, don't mute yourself, please. We're having a conversation here. This is between me and you. Okay, so now look at this. Are you a day trader, a swing trader, or a scalper?
A day trader, sir.
Okay, so if you're a day trader, it simply means your analysis should move from H4 to 1 hour, then to 15 minutes.
Okay.
Don't go above H4. The reason why is, the moment you go above H4, the information that will be provided for you will be the things needed for swing trading. It's as simple as that. So let's start with H4. Let's go on H4 time frame. So you are using zone. Okay, zone. Zone. So let's cut this chart a bit. I'm coming. Let me see if I can cut this chart a bit. Okay. Oh, I'm coming. Really? I should be able to cut the chart. What's the say? Wow. My social media is expired. Hey, Jesus. Okay. How can I explain this? But okay, let's go. I thought my social media is still valid. So based on what I can see here, let's just mark out the zones. So the first thing is I zoom out. So zooming out. So what I can see here, this here is a zone. This here is a zone. Then from this point here, this point here is a zone. I'm still going to have a class on this, on zones. I'm going to have a class on zones soon. So just stay tuned. This here is a zone. This here is a zone. This here is a zone. So this here is a zone. Then this here is a zone. This that you are looking at here is also a zone. Are we together? Do you see what I've just marked?
Yes, sir.
Makes sense. So from this point here, these are the things I can figure out here. So let's go to 1 hour time frame. Let's go to 1 hour time frame. So getting to 1 hour time frame, things become more big. So what I can see here is this point here is a zone. So let me color this. So this is just an okay, and let me change the color to change it. Okay. So this here is a zone. Then I'm also seeing a zone here. This point here. Please, this is what I've done here.
Yes, sir.
I'm also seeing a zone here. I'm seeing a zone here. So what am I doing next? I'm going to 15 minutes time frame straight. 15 minutes time frame straight. Then I'll get into 15 minutes. Okay. So getting to 15 minutes time frame, things becomes more interesting. So what can I see here? I can see a zone here. So then let's change this color to this. I can see a zone here. So now, please. Look at this. We have this point here to this point here. So this is also a zone here. You are making me wanting to love zones. Hey. Okay. So sweet. So if I'll be buying this market, this is what I'll be doing here. So the moment price come and break this guy, what is it now? Okay. The moment price come and break this guy to the upside, oh God. Oh shit. 25 pips. Then zoom. Do you understand? Or you don't understand?
No, I didn't understand. You said 25 pips, really, like.
Okay, so what I mean is, once price breaks this zone to the upside, right? I'll just target, like, my stop loss will be 25 pips. 25 pips.
Okay.
5 pips.
Okay.
Then I'll be targeting something like this. So say, let's have a marathon cash cross any day. But don't see if you really want to enjoy what's it called, class like this. The last boot camp I had, right? It was a marathon class. Morning, afternoon, evening, morning, afternoon, evening, morning, afternoon, evening, right? For 30 days. So in fact, it got to a point we had to stop midnight class because everybody wants craze. So it's gonna happen again around June. Is it July and August, another time. So just get prepared. So it's going to be a marathon class. Trust me. So hope I'm able to expose you a little bit to it, Mr. Gabriel. Right?
Yes, sir. Yes, sir. Yes.
So don't worry, I'm going to actually do a video concerning zones. In fact, I'll work on it this week. So I'm going to post it to the Telegram group. Just stay locked in. Is that all right?
Yes, sir. Thank you very much.
And again, please, before you go, Mr. Gabriel, now zones are good, but psychological level are better. I won't say more than that. So try and look towards psychological levels. Look towards psychological levels. So I'll also
sir.
make a video concerning that too. Thank you. So
Thank you, man.
yeah, you're welcome. So who is the next person on the list? Yeah, okay. So Mr. General Yakubu, we'll meet in class. We'll meet in class tomorrow. We'll meet in our class tomorrow. So don't let me bring your question to class tomorrow. So Mr. Joshua Benson, so unmute, please. Hello.
Sir, good day, sir.
Yes,
Happy
sir.
New
Good
Year.
day, sir. Yes, same to you.
Yes, sir. So, please, the question that I actually have was like, is how do you like set pending orders with psychological levels?
Okay. So let me remove everything I have on my screen. Remove all the drawings. So let's set psychological levels first. Then I'll now talk about the pending orders. So okay. So psychological level, I believe you know how to set psychological level, right?
Yes, sir. Yes, I do. Okay.
Okay, makes sense. Makes sense. So 500. So for those who doesn't know what psychological level is, so look at something. Notice the way price keeps acting on this line. Notice, like price will always react on this line. This point here that you are seeing here is on a psychological level. That rejection there, I can bet my life on it. Is on a psychological level. So let's bring it up. Yeah, psychological level. You see the way price is acting on it? So look at this. Price is rejecting now. On where? On psychological level. Remember, there's also what? There's also a zone. There's also a zone there. Remember, now, there's a zone there.
Yes, sir.
This point here, I can tell you this is a psychological level. Remember that we have a zone here too. So you can see how they walk line in line. They walk
Yes,
hand
sir.
in hand, right? So there's a psychological level here too. Let's see. Yeah, so this makes sense. So for me, right, if I'm going to be taking this trade right here, so let's say you don't just trade psychological levels alone. Let's say you combine it with trend line. Your trend line is looking like this, for example. Your trend line is looking like this. Now, based on what this chart is showing us here, right, is a short time sell for a buy. Is that correct?
Yes, sir.
So what I want to wait for is by London section tomorrow, I want to see price break this line to the upside, then come back down to this line, then pull up. So the moment price come back down to this point here, price will come and clear out these 2 points, here. Come and clear it out because many people are seeing this as a buy opportunity and they are buying now at the wrong time. So they are buying now. So price will pull up a bit because of their buy energy. Will pull up a bit, then price will pull down. It's just notice it will be around the psychological level. So the moment you see that, price will pull up again. At that point, this is when you now buy. So for me, if you're using psychological level, I would advise, don't look towards pending orders, please. Rather, just be there, see it, see the action price is doing. So something like this, something like this. Price pull up, then price pull down, then there will be a bullish candlestick. That bullish candle will break above this one here, then that's when you enter for a buy. So go and notice that's exactly, most of the time when it breaks, that's how it happens, most of the time.
Yes, sir.
So something like this, pull down, then break. Then this break here will be the one that will lead to the next psychological level. This one here, the break here, the pullback will lead to the next psychological level. So that's exactly the same thing we should anticipate here. Does that make sense?
Yes, sir. Thank you so much. I really appreciate it.
Yes, you're welcome. So thank you so much, everybody. So I know that a lot of people are having questions, right? So please, if you want us to keep on doing something like this every week, can you just drop one? Please, if you want us to keep doing something like this every week, in which we'll give floors for questions. Drop one. Okay, makes sense. So for this month, right? So let's speak every Tuesday. Today is Tuesday, right? Every Tuesday by 8 p.m. Tuesday, 8 p.m. We'll be having sections like this in which we'll be enlightening ourselves on what we need to do, what we need to know. And someone said mine is about the boot camp. Okay. The information about the boot camp. So for those that are just joining, I'll be hosting another boot camp. We hosted one some days ago, some months ago, 6 months ago rather. So that's around August. So it was groundbreaking. And this one year to be happening around July and August. So the fee is flat 100,000, flat 100,000 naira. And whether you've been trading before, whether you're a newbie, whether you're a professional trader, is a flaw. Is a flaw for you. Is a flaw for you. So just you can save up to that. Like you can keep saving. And if you want me to help you with your savings, yeah. So start your part payments. Start your part payment now. Okay. Yeah. So Sam, yeah. Sam, let's go on a video call after this. Give me 2 hours after this call. Call me on a video call. Like let's talk. Sam. Yeah. So that's it. That's it, guys. Thank you so much, everyone. Let's enjoy the rest of our night. Bye, everyone.